Class 12 Accountancy Numerical Problems Solutions. Presented by edxit.com. In this video, we are going to provide Accounting for Partnership Basic Concepts, Fixed and Fluctuating Capital Solutions. Problem 2 solution. The problem statement is as follows. Anubha and Kajal are partners of a firm, sharing profits and losses in the ratio of 2:1. Their capitals were 90,000 rupees and 60,000 rupees. The profit during the year were 45,000 rupees. According to partnership deed, both partners are allowed salary 700 per month to Anubha and 500 rupees per month to Kajal. Interest allowed on capital 5% per annum. The drawings during the year were 8,500 rupees for Anubha and 6,500 rupees for Kajal. Interest is to be charged 5% per annum on drawings. Prepare partners' capital accounts. Assuming that the capital accounts are fluctuating. So, as per the problem, we have to prepare the capital accounts, no current accounts. It is also given that we have to assume that the capitals are fluctuating. Of course, if it is given that just the capital account has to be prepared, it indirectly implies that we should not use the partner's current account and all the entries have to be posted into partner's capital accounts only. So, let's start with the capitals. See, this is not a case wherein the business is started from scratch. The business is already there and these capitals are brought down from the previous accounting period to the current accounting period. So, where should we post this? Of course, as these are capitals, these should be posted in the capitals account. So, let's first prepare the format for the capital account. Let's first write the title as Partners Capital Account. Let's then write the headers DR and CR to designate the debit and credit sides respectively. Let's now have the individual columns for date, particulars, journal folio, amount in rupees for the partner Anubha, and amount in rupees for the partner Kajal. Now, as compared to the capital accounts that we were preparing for the sole proprietorship in the previous classes, this capital account is slightly different. As you might have noticed, it has the amount column for each of the partners, not just one amount column as we were preparing for the sole proprietorship. So, as you might have guessed, if there are 3 partners, there will be 3 amount columns, one for each partner. Similarly, let's have the same columns on the credit side also. As you know, for posting the capitals, we create the capital account. So, let's first write by balance brought down in the particulars column on the credit side. Let's then write the partner Anubha's capital amount of 90,000 rupees in her amount column. Let's then write the partner Kajal's capital amount of 60,000 rupees in her amount column. With that, we have completed the posting of the capital balances brought down from the previous accounting period to the current accounting period. Let's now consider the next transaction in the given problem. The next statement in the problem is specifying about the profit. Let's handle the profit at the end. Let's proceed with the next transaction. The next statement is stating that the salary of the partner Anubha is 700 rupees per month and the salary of the partner Kajal is 500 rupees per month. Note here that it's not yearly salary, it is monthly salary. So let's proceed with the analysis of the salary in the working notes. Let's first write the header salary to indicate that the upcoming calculation is related to the salary. Let's first write the subheader Anubha to indicate that the upcoming calculation is for the partner Anubha. Now it is given that the monthly salary of partner Anubha is 700 rupees. So the yearly salary would be equal to the monthly salary of 700 rupees multiplied by 12. This is equal to 8,400 rupees. Let's then write the subheader Kajal to indicate that the upcoming calculation is for the partner Kajal. Now it is given that the monthly salary of the partner Kajal is 500 rupees. So the yearly salary would be equal to the monthly salary of 500 rupees multiplied by 12. This is equal to 6,000 rupees. Now the partner's salary is not actually a salary, but it's a way of distributing the profits to the partners. So it's not the same as the employee's salary. If you remember, we post the employee's salaries to the salaries account, right? But here it is not the case. The business will maintain a separate account called partner's salaries account, which is different from employee's salaries account. So the way we post the partner's salaries is by debiting the partner's salaries account and creating the partner's capital account. Note here that if it is fixed capital method, we post the salaries to the current account. But in this problem, we have to use the fluctuating capital method. So we should directly post the salary to the partner's capital account. Also note that as this problem is mentioning about the monthly salary, ideally we have to post the salary every month. But for the sake of simplicity, let's consider posting the yearly salary. Now the preparation of the partner's salaries account is not in the scope of this problem. So let's leave out the partner's salaries account related debit entry and let's directly post the credit entry to the partner's capital account for each partner. Let's first write the partner's salaries account in the particulars column. Let's then post the partner Anubha's salary amount of 8,400 rupees in her amount column. Let's then post the partner Kajal's salary amount of 6,000 rupees in her amount column. With that, we have completed the posting of the salary for individual partners in the partner's capital account. Let's now consider the next transaction. The next statement in the problem is regarding the 5% per annum interest on their capital. Just to remind you, their capitals are 90,000 rupees and 60,000 rupees. On these capitals, we have to calculate the interest. So, in working notes, let's first write the header interest on capital. Now, the interest on the capital for the partner Anubha will be her capital amount of 90,000 rupees multiplied with the rate of interest on capital, which is 5 upon 100. Let's cancel the 2 zeros in 100 for the 2 zeros in 90,000s. If we multiply the remaining 900 with 5, we get 4,500 rupees. This is the interest on the partner Anubha's capital. Now the interest on the capital for the partner Kajal will be her capital amount of 60,000 rupees multiplied with the rate of interest on capital, which is 5 upon 100. Let's cancel 2 zeros in 100 for the 2 zeros in 60,000s. If we multiply the remaining 600 with 5, we get 3,000 rupees. This is the interest on partner Kajal's capital. Now for posting this interest, we should debit the interest on capital account and create the partner's capital account individually for each partner. Now, as the preparation of the interest on capital account is not in the scope of this problem, let's leave out the interest on capital account related debit entry and let's directly post the partner's capital account related credit entries into the partner's capital account. Let's first write by interest on capital account in the particulars column. Let's then write the partner Anubha's interest on capital, which is 4,500 rupees, into her amount column. Let's then write the partner Kajal's interest on capital, which is 3,000 rupees, into her amount column. With that, we have completed the posting of the interest on capital for each of the partners individually into the partner's capital account. Let's now proceed with the next transaction in the given problem. The next statement in the problem is related to the drawings as well as interest on drawings. Let's first deal with the drawings. Let's first write the header in the working notes as drawings. Now the drawings made by the partner Anubha are 8,500 rupees. And the drawings made by the partner Kajal are 6,500 rupees. When there are any drawings made, we should debit the drawings account and create the bank or cash or purchases or stock account. Remember that the drawings can be in the form of cash or through bank, or it could be in the form of goods. As the preparation of any of these accounts is not in the scope of this problem, let's leave out these entries. Note that after posting the drawings related entries into these accounts, the drawings are transferred to the partner's capital account. Note that when we post the drawings into the drawings account, we post it on the debit side. So when we transfer the drawings into the partner's capital account, we should post it on the debit side of the partner's capital account. As we are transferring the drawings out of the drawings account, we should create the drawings account. Now, as we have already discussed, the preparation of the drawings account is not in the scope of this problem. So let's leave out the drawings related credit entry and let's directly post the partner's capital account related debit entries into the partner's capital account. Let's first write to drawings account into the particulars column. Let's then write the drawings amount of 8,500 rupees for the partner Anubha into her amount column. Let's then write the drawings amount of 6,500 rupees for the partner Kajal into her amount column. With that, we have completed the posting of the drawings related entries into the partner's capital account. Let's now consider the next transaction in the given problem. After dealing with the drawings amount, the next thing that we should deal with is the interest on drawings. As per the problem, the interest on drawings is 5% per annum. Let's now proceed with the calculation of the interest on drawings. Let's first write the header interest on drawings in the working notes. To get the interest on drawings for the partner Anubha, let's multiply her drawings amount of 8,500 rupees with the rate of interest on drawings, which is 5 upon 100. Let's cancel 2 zeros in 100 for the 2 zeros in 8,500 rupees. If we multiply the remaining 85 with 5, we get 425 rupees, which is the interest on drawings for the partner Anubha. To get the interest on drawings for the partner Kajal, let's multiply her drawings amount of 6,500 rupees with the rate of interest on drawings, which is 5 upon 100. Let's cancel 2 zeros in 100 for the 2 zeros in 6,500 rupees. If we multiply the remaining 65 with 5, we get 325 rupees, which is the interest on drawings for the partner Kajal. Now, for posting this interest on drawings, we should debit the partner's capital account and create the interest on drawings account. Now, as the preparation of the interest on drawings account is not in the scope of this problem, let's leave out the interest on drawings related credit entry and let's directly post the partner's capital account related debit entries into the partner's capital accounts individually. Let's first write to interest on drawings account into the particulars column on the debit side. Let's then post the interest on drawings amount for the partner Anubha, which is 425 rupees in her amount column. Let's then post the interest on drawings amount for the partner Kajal, which is 325 rupees in her amount column. With that, we have completed the posting of the interest on drawings related entries into the partner's capital accounts individually. Let's now consider the next transaction in the given problem. As you can see, there are no more transactions in the given problem. So let's directly jump to the appropriation or distribution of profits. It is given in the problem that the profits earned during the year are 45,000 rupees. Now, if you recall, the profits earned by the business is nothing but a credit balance in the profit and loss account, right? So, for distributing the profits, we should transfer the profits from the profit and loss account to the profit and loss appropriation account on the credit side. Also, as we are transferring the profits out of the profit and loss account, we should debit the profit and loss account. Now, the preparation of the profit and loss account is not in the scope of this problem. So, let's leave out the profit and loss account related debit entry and let's directly post the profit and loss appropriation account related credit entry into the profit and loss appropriation account. But let's first prepare the format for the profit and loss appropriation account as it is not yet prepared. Let's first write the title as profit and loss appropriation account. Let's then write the headers DR and CR to designate the debit and credit sides respectively. Let's now have the individual columns for particulars, amount in rupees on the debit side. Let's have the same columns on the credit side also. Let's then write by profit and loss account in the particulars column to designate the profit transferred from the profit and loss account into the profit and loss appropriation account. Let's then write the profit amount of 45,000 rupees into the amount column. With that, we have completed the posting of the entry related to the transfer of the profit from the profit and loss account to the profit and loss appropriation account. The next step would be to transfer the partner's salaries from the partner's salaries account to the profit and loss appropriation account. See, we have not prepared the partner's salaries account as it is not in the scope of this problem. But that doesn't mean that the partner's salaries account does not exist. It will still be there. It is just that we didn't prepare it as it is not in the scope of this problem. So, as the partner's salaries will be debited to the partner's salaries account, when we transfer it to the profit and loss appropriation account, we should transfer it on the debit side. The corresponding credit entry would be in the partner's salaries account as we are moving or transferring the amount out of it. Now, as we have already discussed, as the preparation of the partner's salaries account is not in the scope of this problem, let's leave out the partner's salaries account related credit entry and let's directly post the profit and loss appropriation account related debit entries into the profit and loss appropriation account. Let's first write to partner's salaries account as a subheader in the particulars column on the debit side. Let's then write the partner Anubha's salary, which is 8,400 rupees. Let's then write the partner Kajal's salary, which is 6,000 rupees. Let's then write the total salary amount, which is 14,400 rupees into the amount column. With that, we have completed the posting of the entry related to the transfer of the salaries of the individual partners from the partner's salaries account to the profit and loss appropriation account. Let's now consider the next entry. The next thing that we should deal with is the transfer of the interest on capital for each partner from the interest on capital account to the profit and loss appropriation account. Just to reiterate, we didn't prepare the interest on capital account as it is not in the scope of this problem, but it will still be there, as the interest on capital will be posted on the debit side of the interest on capital account. When we transfer this amount, we should transfer it on the debit side of the profit and loss appropriation account. As we are transferring the amount out of interest on capital account, we should create the interest on capital account. Now, as we have already discussed, as the preparation of the interest on capital account is not in the scope of this problem, let's leave out the interest on capital account related credit entry. Let's directly post the profit and loss appropriation account related debit entry into the profit and loss appropriation account. Let's first write the subheading to interest on capital account on the debit side in the profit and loss appropriation account. Let's then write the partner Anubha's interest on capital, which is 4,500 rupees. Let's then write the partner Kajal's interest on capital, which is 3,000 rupees. Let's then write the total interest amount, which is 7,500 rupees, into the amount column on the debit side. With that, we have completed the posting of the entries related to the transfer of interest on capital into the profit and loss appropriation account. Let's now proceed with the next step. The next step would be to transfer the interest on drawings from the interest on drawings account to the profit and loss appropriation account. Just to reiterate, we didn't prepare the interest on drawings account as it is not in the scope of this problem, but it will still be there. Also note that we are now dealing with the interest on drawings. What about drawings? Well, we have already transferred the drawings to the partner's capital account. You need to remember this fact. We transfer the drawings to the partner's capital account and not to the profit and loss appropriation account. Now, as the interest on drawings will be posted on the credit side of the interest on drawings account, when we transfer this amount, we should transfer it on the credit side of the profit and loss appropriation account. As we are transferring this amount out of the interest on drawings account, we should debit the interest on drawings account. Now, as we have already discussed, as the preparation of the interest on drawings account is not in the scope of this problem, let's leave out the interest on drawings related debit entry. Let's directly post the profit and loss appropriation account related credit entry into the profit and loss appropriation account. Let's first write subheading by interest on drawings account on the credit side of the profit and loss appropriation account. Let's then write the partner Anubha's interest on drawings, which is 425 rupees. Let's then write the partner Kajal's interest on drawings, which is 325 rupees. Let's then write the total interest amount, which is 750 rupees, into the amount column on the credit side. With that, we have completed the posting of the entries related to the interest on drawings into the profit and loss appropriation account. The next step would be to calculate the amount of profit that should be appropriated or distributed among the partners. Now, the total on the debit side of the profit and loss appropriation account is 21,900 rupees. And the total on the credit side of the profit and loss appropriation account is 45,750 rupees. From the total on the credit side, which is 45,750 rupees, if we subtract the total on the debit side, which is 21,900 rupees, we get 23,850 rupees. Now, this 23,850 rupees is a credit balance, right? A credit balance in the profit and loss appropriation account represents a profit. So, this amount should be distributed among the partners in their profit sharing ratio. Now, as given in the problem, the profits or losses are shared among the partners in the ratio 2:1. So, let's distribute the profits in this ratio. Let's first write the header profit sharing in the working notes section. Now, the share of profit for the partner Anubha will be equal to the total profit of 23,850 rupees multiplied with her profit sharing ratio of 2/3. Cancelling with 3, 3 ones are 3 7,950s are. If we multiply these 7,950 and 2, we get 15,900 rupees, which is the profit share of the partner Anubha. Now, the share of profit for the partner Kajal will be equal to the total profit of 23,850 rupees multiplied with her profit sharing ratio of 1/3. Cancelling with 3, 3 ones are 3 7,950s are. If we multiply the remaining 7,950 and 1, we get 7,950 rupees, which is the profit share of the partner Kajal. Now, for transferring this profit to the individual partners, we should debit the profit and loss appropriation account and create the partners' capital accounts individually. So in the profit and loss appropriation account, let's write the subheader profit transferred. Let's then write to Anubha's capital account and the corresponding profit amount of 15,900 rupees. Let's then write to Kajal's capital account and the corresponding profit amount of 7,950 rupees. Let's then write the total profit transferred, which is 23,850 rupees, into the amount column. With that, we have completed the posting of the debit entry related to the transfer of the profit from the profit and loss appropriation account to the partner's capital account. Let's now post the corresponding credit entry into the partner's capital account. Let's first write by profit and loss appropriation account into the particulars column on the credit side. Let's then write the partner Anubha's share of profit, which is 15,900 rupees, into the corresponding amount column. Let's then write the partner Kajal's share of profit, which is 7,950 rupees, into the corresponding amount column. With that, we have completed the posting of the credit entry related to the transfer of the profit from the profit and loss appropriation account to the partner's capital account individually. In fact, we have completed the posting of all the entries related to the partner's accounts. So, it's now time to find the totals, balance the accounts, and close the books. The total on the debit side of the profit and loss appropriation account is 45,750 rupees. Similarly, the total on the credit side of the profit and loss appropriation account is 45,750 rupees. So now the profit and loss appropriation account is balanced. Let's now proceed to the partner's capital account. The total on the debit side of the partner's capital account for the partner Anubha is 8,925 rupees. Similarly, the total on the debit side of the partner's capital account for the partner Kajal is 6,825 rupees. Similarly, the total on the credit side of the partner's capital account for the partner Anubha is 1,18,800 rupees. Similarly, the total on the credit side of the partner's capital account for the partner Kajal is 76,950 rupees. From the total on the credit side for the partner Anubha, which is 1,18,800 rupees, if we subtract the total on the debit side, which is 8,925 rupees, we get 1,09,875 rupees. Similarly, from the total on the credit side for the partner Kajal, which is 76,950 rupees, if we subtract the total on the debit side, which is 6,825 rupees, we get 70,125 rupees. These are the credit balances of the individual partners and should be written on the debit side. Let's first write to balance carried down into the particulars column on the debit side. Let's then write the credit balance amount of 1,09,875 rupees for the partner Anubha into the amount column on the debit side. Let's then write the credit balance amount of 70,125 rupees for the partner Kajal into the amount column on the debit side. Now the total on the debit side of the partner's capital account for the partner Anubha is 1,18,800 rupees. Similarly, the total on the debit side of the partner's capital account for the partner Kajal is 76,950 rupees. Similarly, the total on the credit side of the partner's capital account for the partner Anubha is 1,18,800 rupees. Similarly, the total on the credit side of the partner's capital account for the partner Kajal is 76,950 rupees. So now the partner's capital account is balanced. With that, we have come to the end of this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.